Boris Schlossberg, Managing Director at BK Asset Management.
BK Asset Management's Kathy Lien.
Good morning, everyone. This is Kathy. I want to wish you all a very good morning. Hello, hello. If you can hear my voice, please say yes into the questions box. Let me know that everything is coming through well. I am just getting everything organized here. Hold on one second. Let me see if I can find the comments. Thank you, Cheryl. Thank you, Fran, Harsh, David. Good morning, everyone. Yes. I was a little late, and I will tell you about why I am a little late. I think that you guys will be quite interested in knowing why, I was kind of late this morning. And the reason why I was a little late was because I was doing a little research into Bitcoin and the surge that we've had in Bitcoin and how it parallels to the time when gold was introduced as a reserve asset. And so, I'm going to be sharing some of that information with you this morning. But that is one of the main reasons why, I've been a little tardy in saying good morning this morning, because I was in deep research about Bitcoin. My stream is pausing. Is it not clear for everyone? Is my stream kind of wobbly? Let me know. Let me know if it's clear. Let me know if it's wobbly. Boris, if you don't mind, I know he's here. If you don't mind, maybe posting a poll. How many of you trade crypto? Let's see. Okay, sounds like it's your problem, Hussein. We're going to put up a little poll, if Boris can hear us, on how many of you trade crypto, because the big story this morning is that Bitcoin has surged above $80,000. And I'll talk about that in a minute, but I'm not sure if he's around. Boris, can you do the poll for Bitcoin? And how many people trade Bitcoin, don't trade Bitcoin?
Yeah, okay, I just did the poll. I just posted it up.
Oh, I see it now. Sorry about that. It's on YouTube. I'm staring at StreamYard instead. And so I'm very curious about, how many of you actually trade crypto. I think a lot more people will be trading crypto these days. And so let me start by sharing my screen. I think that's the best way to start. And we're just going to talk about, what's going on in the markets this morning. And then we'll talk about Bitcoin, how Bitcoin has surged to $80,000. And then we'll talk about, what else is kind of expected this week, what's driving this move, and all that fun stuff. Okay, to kick off, stock futures, U.S. stock futures. Today is actually a holiday in the U.S. It's Veterans Day. But even though it's a holiday, the bond market is closed. U.S. banks are closed, but the stock market is open and the futures market is open. Of course, CFDs and forex are open as well. So the stock market is open. It's not a holiday in the stock market. And as a result, stock futures are open. They're rising. And stock futures, the Dow Jones Industrial Average, has hit a fresh record high. It is, of course, not the only instruments that is hitting a fresh record high, because you can also see that Bitcoin is, if we look at Bitcoin is above $80,000 now. I don't even need to go to the monthly chart. This is also a fresh record high for Bitcoin. And we're going to talk about that in just a moment. So aside from, and hold on one second, I'm just going to put something on Twitter real quick. We are also talking about Bitcoin at above 80,000. Okay, so Bitcoin is also above 80,000, and we'll be talking about what all that means and how much further it can rise, and if it can rise, and how much further it can rise. But aside from that, a couple other things to note. First off, the dollar is up pretty much across the board. It's up against the euro. Euro is one of the weakest performing currencies, second only to the Japanese yen. We also have the dollar up against sterling, the Swiss franc, yen, Aussie, Kiwi, CAD, dollar up across the board. What's kind of interesting about this is that even though the dollar is up across the board, U.S. yields are actually kind of lower. I think that this is because U.S. yields are frozen because remember what I said, the U.S. bond market is actually closed today, so we don't really have as much movement in U.S. bonds as we do in some of the other instruments. Gold is down a lot. Gold is down almost 2%, and oil is down 2.5%. This is almost exclusively due to the strength of the U.S. dollar, because gold is priced in dollars, and so the strength of the U.S. dollar is one of the main reasons why we are seeing gold prices down 1.7% today. Now, in terms of gold, there is some support. Let me get my horizontal line here. There is some support in gold at the swing low here. More significant support at the swing low here is 2604. Overall, though, I still think that gold is going to test those levels. I think that the dollar, which soared after President Trump's win, and this was President Trump's victory on Wednesday, and then it pulled back after the Federal Reserve cut interest rates by 25 basis points, and then it rebounded again. So I think, we're seeing the new leg. I think the dollar, for the most part, remains firm. And that we have some very important data from the U.S. this week, which we'll talk about in just a little bit. But we have some very important data from the U.S. But in general, I think that even if some of this week's economic reports from the U.S. surprise to the downside, I think that we're going to see that be an invitation for buyers to come in at lower levels for the dollar. But what I really wanted to talk about a little bit this morning, that at least it's it's interesting to me, and so I think it should be interesting to you, is of course Bitcoin. When you have an asset hit a fresh record high, it always leads you to wonder how much further can it rise. Now, Bitcoin is one of the psychological assets that love to hit psychologically significant levels. Like the next stop for Bitcoin should really be 100,000, because everyone's focusing on the 100,000 mark. And, what's really interesting about this is that it's not just a technical move. It's not just a psychological move, but there are some fundamental factors that have driven Bitcoin prices up, from Trump's victory, which, was basically this move here. So basically from 70,000 to 80,000. So up 10,000 in a matter of less than a week. And this is because of Trump's election win and his pro-Bitcoin stance. And, the real question that people have is whether Bitcoin could become a reserve asset for the U.S. like gold. I mean, this is what Trump has been suggesting. And there is legislation that is happening that could move the U.S. in that direction. This isn't the first time something like this has happened. Back in 1934, President Roosevelt signs the Gold Reserve Act. And when he did that, and that was when it made gold, a part of the reserve currency, it actually drove gold prices up 69%. So if we just kind of take from the conservative level of 70,000, a 69% rise could easily take us towards 120,000 in Bitcoin. So, Bitcoin, the question is, could Bitcoin head down a similar path as gold? I think that, this is very, very important because, this is the future. Crypto, Boris and I were just in Asia. Crypto is used widely in many other parts of the world. Not so much in the US because there's a lot of skepticism. It's certainly not used as it's not a commonly used transaction currency. But with Elon Musk, who's obviously a crypto bull, and whispering in Donald Trump's ear, and Trump himself supporting crypto as a more readily used instrument, there's a very, very good chance that this Bitcoin Reserve Act, especially with Senate and House on his side, will be passed. So to understand what Trump's Bitcoin Act could mean for the future of cryptocurrency, I wanted to talk a little bit about how, gold was added as a strategic asset and what it meant for the markets in general. So we have to go back very, very far. And this was the research that I was doing and the reason why I was coming on late. And basically, during the Great Depression, President Roosevelt signed the Gold Reserve Act in 1934. And what this act did was make gold a formal part of the U.S. Treasury reserves. And at that time, it raised gold prices from $20 to $35, which doesn't seem like a lot, but it's a 69% move. And this reevaluation dramatically raised the value of gold, of the country's gold reserves, which solidified the gold's role as a safeguard for the economy. So the whole Bitcoin Reserve Act, one of the main outcomes of it would be solidifying Bitcoin as a asset class is when it goes into the reserve. Now, if we fast forward to 1944, the U.S. took another critical step with the Bretton Woods Agreement, and it basically established the dollar as a world reserve currency backed by gold. Other currencies were pegged to the dollar, and they were all, and some of them were agreed to exchange dollars at gold for fixed rate of $35 an ounce. This structure stabilized the dollar, and it also elevated the U.S. dollar's status. Now, I'm not saying that we're going to see the dollar being pegged to Bitcoin. That would be a huge stretch. But what could happen is the next step, or we just simply jump to the next step, which, what happened in 71 when President Nixon ended the convertibility of the dollar to gold and allowed gold to free float on the market. And as a result, gold prices skyrocketed. So gold went from $35 to $800 an ounce by the end of 1970 as demand surged, inflation soared, and investors sought a hedge. So what I'm talking about here is very important because people sometimes look at Bitcoin as an inflation hedge. So you have the combination of inflation possibly increasing after Trump takes office, announces his tariffs leading to higher prices and a bigger budget deficit. You have also Bitcoin demand, increasing as if the Bitcoin Reserve Act actually passes and it becomes a reserve instrument, both of which could easily drive Bitcoin prices up 69% like it did in 1934. So if that happens, that could very much easily, even before that happens, drive Bitcoin above 100,000 and then even see Bitcoin to 120,000. So Bitcoin, we don't talk about Bitcoin often, but it is, certainly an instrument that you can trade with, any of our forex partners, forex CFD partners, any of our prop partners. You can look at the description of the video. Boris, maybe you can put some links in with our forex CFD partners, our prop partners that you can trade Bitcoin with, because Bitcoin, has, in my opinion, of course, definitely do your own research, has a lot more room to go under the Trump administration and after the Trump win. Now, of course, there's some critics because introducing crypto as a reserve asset introduces volatility, uncertainty, but, Yeah, I don't think the market cares about that. Boris, if you want to add in our forex CFD partner as well, 8cap, that allows you to trade gold. All right, so now let's talk about the dollar and talk about this week and talk about what is expected for the market. But before I get into that, we got a huge event happening on Saturday, which is our Trader Fest, and we have invited 12 speakers, myself included, to talk about all of these big things that are happening in the market, including Karen Fu, Trader Nick, Binny Ong, Austin Silver, lots of really, really great people who are joining us. And, I do want to, I'm going to show you this real quick, if you don't mind. Hold on one second. And then I promise you we'll talk about the markets. Actually, I'm going to move back to the heat map while we do this, while I look for this. And we're going to talk about, the dollar and what, all of the dollar impacts could mean for the markets. Here we go. This is what I want to share with you, if you'll bear with me. So make sure you sign up for Trader Fest, because stop that. Make sure you sign up for Trader Fest, because we have 2 market wizards from Jack Schwager's Market Wizards book. We've got myself, Karen Fu, Austin Silver, Trader Nick, a whole bunch of really, really powerhouse speakers. But, that's all I'm going to say about it. Boris is going to drop the link for Trader Fest. Boris, please drop the link for U.S. Trader Fest attendees as well, because we have a separate link for U.S., a separate link for international. But let's go ahead and talk about the markets. So I talked about Bitcoin. I talked about how Bitcoin has more room to run. If you're just joining us right now, you've got to watch everything I've said about Bitcoin, because I said a lot. But that is not the only asset that's hitting, new highs. We've got Bitcoin hitting new highs. We've got U.S. stocks hitting new highs because of the prospect of tax cuts on the consumer and business level. We have the dollar soaring across the board. And as I said earlier, the dollar has more room to run. And the dollar has more room to run because we have, a lot of the policies that are, that from Trump that are pro-dollar, protectionism, as well as tariffs, which are going to increase inflation, as well as just an America First theme that is going to bolster the demand for the greenback. And you add on top of that just good U.S. data, and it shows you how, the U.S. will shine compared to the other major countries' currencies. And that is why the dollar is in demand. That is why the dollar is so strong. And, in addition to that, the Federal Reserve cut interest rates by 25 basis points, signaled more to come, but did not sound overly dovish. So for all of those reasons, I am pro dollars in the long term. Now, in the short term, this week, we have 2 very important releases. We have the U.S. inflation report, and then we have the U.S. retail sales report. I think we will probably live trade the U.S. inflation report with you on Wednesday. I'll have to double check with Boris. If we do, make sure you check our live stream calendar. But we have 2 very important releases that probably will not be good for the dollar. The U.S. inflation report is on Wednesday. We did have lower gas prices, which, will bring down inflation. Fed's already told us that they're kind of confident that inflation is going to continue to move towards target. And then we also have a stronger dollar, all of which is negative for inflation. So I do think it could drive the dollar down a little bit. But as I said at the top of this stream, I think that even if the dollar pulls back, it's going to attract buyers. After that, on Friday, we have the U.S. retail sales report. Now, in terms of the U.S. retail sales report, we did have stronger Red Book sales, and we had stronger earnings. And even though non-farm payrolls report was weaker last month. If you strip out the strikes and you strip out the storms, which there probably was an increase in spending to shore up the homes and the any sort of real estate and things like that ahead of the storms, retail sales may not be so bad. So we may have a weaker inflation report. And in many ways, inflation is more important than retail sales because that's really what the Fed's watching. We may have a weaker inflation report, but we should have a stronger retail sales report. Now, Fred is asking, how do you trade the neutral currencies that are neutral? Well, currencies that are neutral means that I can go either way. At that point, I'm going to be focusing on the technicals, and I'll be flexible to go long or short. But let's talk about them. So, the two main events are U.S. inflation, U.S. retail sales. We're also after the quiet period for the Federal Reserve. So we have a lot of Federal Reserve officials speaking, and so, including Powell this week. So definitely pay attention to the possibility of U.S. retail sales report, Fed speak impacting the markets as well. So one of the worst performing currencies is euro. Why is the euro so weak? Germany, the largest country in the Eurozone, is kind of in a political crisis right now. The government collapsed the day after or shortly after the US election. And so they're in a political crisis. Data has been weaker. ECB plans to cut interest rates further. And most importantly, the tariffs the proposed tariffs from President Trump could do quite a bit of damage to the German auto sector. So as a result, euro has been punished hard and has fallen to a 6-month low and could continue to fall further. Sterling, Bank of England cut interest rates last week by 25 basis points. We do have UK GDP numbers this week. And we had stronger retail sales, stronger trade in the third quarter. So, we could get a little bit of strength in the UK GDP numbers. The sterling itself is kind of in a difficult bind because on the one hand, the PMIs have been weaker. The Bank of England cut interest rates. The market's not necessarily looking for another follow-up move right after. And the reason is because they announced this huge budget. They announced this huge stimulus budget package. And this budget package is expected to promote growth and inflation in the UK next year. And that's why I'm neutral sterling, because it can kind of go either way. I'm also neutral Aussie. Overnight or over the weekend, we have weaker Chinese inflation data. And Chinese data in general has been kind of softer. But the key here is that, Australia has been doing good. The RBA has been doing good. They've been, kind of confirming to us that they have no plans to cut interest rates this year. But this week, the most important release from Australia is going to be the employment report. And the employment report, we did have weaker manufacturing. The PMI show weaker manufacturing jobs. And we had a very, very strong number the previous month. So we could get a pullback. And that pullback is likely after a robust month. For those of you that are just joining us, I talked a lot about Bitcoin and how Bitcoin could follow in the footsteps of gold when it was added as a reserve currency and rise as much as 69%. So make sure you rewatch the beginning to hear all the reasons why I think that's going to happen. The Canadian dollar. I'm bearish the Canadian dollar. We had a weaker jobs report. Bank of Canada is still expected to cut interest rates quite aggressively. Oil prices have come down quite a bit. I think that, CAD will remain bearish. We don't have much in the way of data from Canada this week, so it's really going to trade on the market's appetite for US dollars. For the New Zealand dollar, I'm bearish New Zealand dollars. We have New Zealand PMIs this week. That's probably going to end up being weaker as well. And the RBNZ is also expected to continue to cut interest rates. Swiss franc, I'm bearish Swiss francs. We don't have any Swiss data, but Swiss data in general has been kind of soft. And Swiss franc in general has been less volatile than the yen. But data from the Switzerland, including inflation data and other reports, have been more negative than positive. And then finally, the Japanese yen. Japan was also in a political crisis. Their government, was in disarray, but they have, because no one was a majority, decided to keep Prime Minister Ishida with a minority government. And what that means is that any sort of new stimulus policies will be difficult to pass with the minority government. And that's part of the reason why the yen's fallen so much today and why traders are disappointed, because the minority government is not good for any stimulus for Japan. Now, in terms of the charts, taking a look at Euro's fallen to 6-month low. We're going to have to go to our monthly charts to find where support is. And I'm going to, it's not there. That's, we don't get a fib from there. We met a fib over here. So, 105 is obviously a significant psychological level. But aside from 105 being a psychologically significant level, we have a 38.2% fib in the euro dollar, which coincides with this low right here at 106.17. So I think that euro dollar could drop down to 106.17. That is support, but that's flimsy support. The major support is going to be at 105 and then 105.50, which is where we have these lows over here in euro dollar. Pound dollar is moving lower. We've got support right at the 200 SMA in pound dollar. And, like I said, we don't have much going on in UK in the front of the week. It's not until UK GDP numbers later on in the week that's really going to matter. But we've got support at 128.15 in pound dollar, and we're at support right now, but I think path of least resistance is lower. Dollar Swiss, nice surge in dollar Swiss today. Resistance up at 88.20 in dollar Swiss. I think, like I said, inflation data from the US is probably going to be a little softer. I think that dollar Swiss is going to continue to rally. So as continue to rally, and I think that it could possibly touch this resistance level and then pull back. Dollar yen, on the other hand, we've got a lot more resistance. A lot more room to run in dollar yen. Dollar yen's got is just moved above the 61.8% fib. And we've got resistance up over here at right underneath 155 at 154.78. And we have more significant resistance at, we have more significant, little one is here. It's a holiday. He wants to say hello. We've got more significant resistance here up at 155 and up here at 157. But either way, dollar yen has broken to the upside, has more resistance further at higher levels than dollar Swiss. And so there's definitely more opportunity in dollar yen and dollar Swiss. In Aussie dollar, we have Aussie dollar below all of the major moving averages. As you saw, I was neutral the Australian dollar. Support in Aussie dollar is down at, we're hovering right around support right now, which is why it's a little bit difficult to move here. And, but, if we do get a little bit of a dip lower in Aussie, the next stop is going to be the swing low here in the 78.6% fib. Kiwi is also below all of the major moving averages, so definitely some more downside in Kiwi dollar. Overall, as you can see what I'm saying, that the dollar uptrend remains intact. All of these currencies are still moving upwards. Dollar CAD as well. Dollar CAD resistance is, there's a lot of resistance right underneath 140. That's, it's even 139, 140. That's a huge psychologically significant level in dollar CAD. So, watch out for that. It may not break it easily, in my opinion. Now, before I go, thank you so much, Fran. So one of you have been asking about how to use ZIP. I just want to talk about it briefly. ZIP is the indicator that I use to trade. I'm not sure why it's being a little wonky right now. Let me see. This is supposed to be red. For some reason, it's not. I think it's just the shading that's a little off right now. But yeah, for some reason, my ZIP is not working on this trading view right now. I don't know what happened. Boris, maybe we'll have to look at it later. Oh, here we go. See, I don't know. Sometimes maybe it's a delay. So basically, this is supposed to be red. I don't know why the shading is not red right now. I'll have to look into it. But overall, you can see that when we have the white candle, when the background is green, it means that the longer trend is positive. When the background is red, it means the longer term trend is negative. When the currency pair is trading below the indicator line, it means that the short-term trend is negative. When it's trading above the indicator line, it means that the longer-term trend is positive. When we get a white candle, that is a signal to buy or sell. So for some reason, this is not red on this chart, but this is supposed to be red. And so the white candle formed because the background is red and it dropped below the indicator line. And usually I only trade this during my active market hours, which is the New York Open or the Asia Open, or shortly before that if we get a signal. So here we have a pure zip sell signal in Eurodollar, beautiful move lower, huge move lower here in Eurodollar. Here's another example of a zip sell signal in Eurodollar as well. We have another zip sell signal. And then here we have a tiny candle, but this is a zip buy signal in the Eurodollar, which also still led to, and I use this on 1 hour charts, 108.80 up to, almost over 50 point move in Eurodollar. Sure, let's look at it in gold. And as I said, for some reason, zip is having, this is what it's supposed to be. It's supposed to look red. For some reason, I think maybe TradingView is just freaking out a little bit. But here, this is zip sell signal. Now, this is right at the Asia Open on Sunday, which is when I trade. Here, we also have sell signals, but this, if you notice, is at 11 a.m. New York time and 3 p.m. New York time, which we don't trade. This is at 1 a.m., which is the London Open, which we don't trade either, but we did get it during the Asia session. Well, actually, no, London does work. We got it during the Asia session. And even if I came in during the New York session, this still would have been a good opportunity because we had multiple zip sell signals. Here's another zip sell signal. This is, consolidation. This, you wouldn't have been stopped out because you were taking this zip long signal. It catches the really nice trends, and it gets faked out a little bit for small losses, but it's kind of your classic. Here's another 2 zip sell signals in gold. This is when gold is consolidating, and here's, you get small losers, big winners. But when gold really trends, it really trends. All right. As you can see, let me open up. My kids are around for Veterans Day. So I'm going to pass the torch to Boris. But before I do so, I want to take any questions that you may have. What is the most legit prop firm in your opinion? If you're looking at forex CFDs, I'm a huge supporter of broker-powered platforms. When you think about it, they're not going to want to rip, even though they are regulated elsewhere, they're not going to want to risk their brand reputation. And so, and obviously they come from a company with more experienced management. These companies have been around for more than a year, 6 months, so the longer they've been around, I'm a huge supporter of broker-backed prop firms like Think Capital, Axie Select, DNA Markets. We've got a discount code there for Think Capital. I prefer those over any of the other forex CFD prop firms. And then in terms of futures prop firms, we work with Apex Trader Funding. Many of you are funded with Apex Trader Funding using our strategies. So, our customers are happy. So that's, so that's who we basically like for futures. Let me see if there are.
Okay, I just want to add, for those of you who are interested in zip, I actually posted the zip explanation video, which is a full half-hour explanation, in-depth video that Kathy made a little while back. The link is right there. And if you want to try it out, I posted a discount link. I'll do it again right now to try us out. If you want to try us out just for a month on a discount link, you can actually get access to Kathy's zip and trade gold, trade FX with it. It's a very, very powerful trend trading tool. Really, really useful. So hopefully you guys.
The most important thing that you guys can do is sign up for TraderFest, thetraderfest.com. We've got 12 powerhouse speakers, and you've got lots of great stuff. We've got 2 market wizards, Jimmy Jude and
actually, the market wizards are Jason
Sorry,
Shapiro.
Tom Basso and Jason
Basso.
Shapiro. Sorry.
But we have an amazing slew of traders. Many of them world-renowned traders that I'm going to have there. Take a look at the lineup there. You're going to have Tracy. You're going to have Anthony. You're going to have Jimmy Jude. All of these guys are old-fashioned pit traders that are going to bring back 30, 40 years of trading experience. It's going to be really fascinating to talk to them.
And it's this Saturday. Just for registering, you get access to Flash Trader. Boris, and just so you know, here's a little video on what Flash Trader can do. Just for signing up, you get access to Flash Trader.
Yeah, which is essentially a single.
I'm playing the video, Boris. Hold on a second.
Yeah, I'm trying to explain what it is. It's hard. The video isn't going to give them the full view of what it is. It's basically a single click execution platform on MetaTrader 4, MetaTrader 5, meaning that you can do a million different things with it with just one single click, including stops and targets, cancel all orders.
Boris, you're going to have to repeat that again because I was playing the video and the audio. So why don't you just give a quick snippet again on what Flash Trader is?
Okay, so what I was saying is Flash Trader is an MT4, MT5 platform, a single-click platform that will allow you to put stops and targets instantly into a trade, allow you to do multi-exit strategies, so short exit, long exit, move to break even, allow you to close all trades with a single click, allow you to close trades before roll, allow you to close trades at the weekend, allow you to have a running P&L total of what's going on, and allow you to basically trade in dollar size as well as lot size. So, for example, if you want to buy $10,000 worth of Bitcoin and $10,000 worth of euro, equal lot, equal dollar basis, it will allow you to buy that instantaneously. All of that really pre-calculated. Kathy kind of gave me a whole list of things that she wanted traders to have, and I am working on that list, and we will have it for you. So if you register for TraderFest, you're going to get access to this amazing tool, which is great. It will work with any broker. Not just ACAP, just to let you guys know. So it's fully transparent. You can test it on your own broker if you want, and it's going to be a really, I think, one of the best trading tools around. Everybody who uses it never wants to give it back because it's so useful.
And even if you can't make it, register. It's recorded. The video will be sent to you. Correct.
As long as you register, we will be able to provide the tool for you. But if you can't, then you won't be able to get it. So be sure to come in there and register. Just put your name. I'm going to, let me just give you the, for those of you who need the US link, just give me one second.
I already posted it, Boris.
Okay, very good.
Okay, so I have to say goodbye because I'm, as you can see, I'm pushing my kids out of the office right now. Boris will weave into trading and talk about everything. This is a very good question, Harsh. Yes. The Bitcoin, if it becomes a reserve currency, could very well, hurt gold. And I think that's a very, very good point that you make. I love the intelligent comments from all of you. And what did the survey end up, Boris? I didn't even pay attention.
Oh, let's take a look. I haven't closed it up yet. Let me just see what we did. So 32% trade crypto, 68% don't, and that is a really good sign. That is a really, really good sign because that means is that the product is nowhere near saturated. One of the great experts on market positioning, market wizards, Jason Shapiro, is going to be with me at TraderFest. It's going to be a conversation I'm going to have with him about what he thinks about crypto. He actually posted a really brilliant chart this week about how everybody completely misunderstood or misplayed crypto by thinking that it was too high and shorted it at the tops, whereas all the commercials were buying it. So he's going to probably have some really good insights. But the fact that 2/3 of you do not trade crypto is actually a good sign. There's probably more for it to go as we get into the 2025. It'll be fascinating. We'll discuss all those things as well as gold, indices, FX, everything. Kathy's going to be there at TraderFest. You get a chance to ask her questions too. So it'll be a lot of fun. Okay, I'm going to end the poll now. Thank you guys, everybody, for voting. Thank you guys for hanging out with me, with Kay. And we're going to get to business because I got some really good business to talk to you about. Why not swing trade? Why day trading? Are you talking to me, Abdullah, or are you talking to Kathy? Because depends on who you ask. Bitcoin becomes, anyways, let me know what who you're talking to, because we have completely different answers to that question. All right, everybody looking at my charts here. Everybody looking at the scalper chart? Huh? Give me a yes. Give me a hi. Tell me that you guys see me, that you hear me, that sound is good, that everything is hunky dory. Where are you guys? Oh man, where's my oh shoot, I blew you out. Okay, hang on a second, guys. I need all right, I gotta hang on a second. I gotta put you guys back into my YouTube. I closed out a key thing. Just bear with me a sec, guys. I need the the live channel in the background so I can watch you guys. Cheryl, how are you? All right, Tiger, somewhere in the Rockies. Hi guys. Everybody's good. All right. I got an awesome upgrade to our scalper. I'm going to explain it all to you. It's going to actually become so simple to understand, and so kind of really cool to do. So let me. We're going to take a look at gold first because it's the most extreme example. So everybody sees the chart, right? Everybody sees the chart, and you guys know. So just for those of you who are new, who may never scalp with me, we like to scalp with trend, meaning that if I'm below the black line, I want to be selling. If I'm above the black line, I want to be buying, except, and this is the key thing, except when we get to the extremes. Then at the edges of the extremes, once we get like massive moving average separation, this is the short term against long term. Once I get that big gap, huge gap between the longer term and the shorter term, the thing I love to do is buy them or sell them. I love to trade the edge and trade the opposite side. Now, the red labels are the sell labels. The purple labels are what called the counter trend labels. That means you're trying to go counter trend. But what I've done here to make it so much easier, just to show you what the old indicator looked like. Let me just kind of show you what it looked like before. It just showed you. What is this thing? It just showed you. Let me mute the new one. So this is the old one. The old one just simply showed you, sell points without telling you how many of those sell points there are, right? And the new indicator does the exact same thing. It's exact same sell points. However, this is the cool part. It gives you a much greater or much more interesting statistical idea of where you are in trend. So if you're like on the 9th, 10th, 11th, 12th, 13th sell signal in a trend, right? The probability that you're oversold is much higher than if you're in the first or the second, right? And if you combine that with the fact that you have massive moving average separation, so in other words, big difference between the moving averages, along with very high double-digit numbers here on the sell side, buying the dip here, not a bad strategy. So I spent, while Kay was talking, I was trading like a maniac. Let me show you what we did here. You can see I was buying, selling. I was buying the dips, getting stopped out, buying the dips, getting stopped out, buying the dips, making all my money back, and then some. And that's the key thing to what I do. And I'm going to show you exactly how I do this in a very methodical manner. Oops, sorry. Let me just do this way. I want to get rid of the labels. The cool thing about what I do is I never ever assume that my first trade is the right trade. I never assume that my second trade is the right trade. Sometimes I don't even assume that my third trade is the right trade, right? Generally, I'm not crazy enough to do more than 3 or 4 trades in a particular move. But I generally don't have to. If I'm doing a good job, I generally don't have to. When I go against a trend where I'm trying to buy the bottom over here, like in gold, right? I will usually make 2 or 3 probes with the help of my scalp indicator, because if I'm buying very deep in the money, or conversely, if I'm looking at the purple labels, which are the reversal labels, and I'm buying here and I get stopped out over here, right? And I buy here and I get stopped out over here, the third one usually is going to work. So if I bought here, it absolutely worked to the upside. The interesting thing is that all of last week, I was using the $50,000 account with Apex, which is I found that to be sort of the sweet spot of the account, right? Because to a $50,000 account with Apex, you need to make 3,000. You have a $2,500 drawdown. It's a pretty equal draw, loss to win ratio. So it's kind of almost 1-to-1. So it's relatively easy to manage. And the way I do this is I trade with a micro contract. So I'm trading for a $20 trade on NASDAQ, $20 trade on S&P, $20 trade on gold, the three instruments that I'm generally trading. And so that means, if what I'm trying to do is make $200 during the day using these micro contracts. And of course, I'm going to be losing, then I'm going to be doubling up. I'm going to be losing, I'm going to be doubling up. This gives me the leverage to recover my trades and put myself into P&L. And that's been going great. I'm at the 50,000 was only 50,000. And then as of today, last night, it's about 50,700. So I'm making very steady and clean progress towards the funding. But then I have these other $250,000 accounts, which I've been very much struggling to try to get to target. And I've been a couple of them I blew up. A few of them I just had a lot of big retraces. And then the thing that struck me is I realized that this particular approach of just using one contract, one mini contract in this case, not a micro contract because it's too for 50,000, but doing it at the edges or doing it right away, at the beginning of the trend. And giving myself more than one trade to make myself whole, more than one trade to make myself profitable, actually works super well with the $250,000 account. Now, here's the cool part. I can work really hard, make $200 on the 50,000, and it will take me about 15 days if I'm working super hard to fund to 3,000. So 200 divided by 3,000 target, if I'm making no mistakes, every single day is a winner, which is a lot of big ifs. So 15 days to funding on 50,000, right? Now, however, this is the really cool part. On the $250,000 account, right? Same sizing, but I'm just going 10 times larger. I'm starting with the minis. It's relatively reasonable for me to make 2,000 in this particular fashion. There are 10 trades at $200 each. That's 2,000, and I resolved like 3 or 4 trades while Kay was talking, right? So think about that. That's 2,000. I got to make 15,000. So that's only 7 days to funding the $250,000 account. And this may be the absolute perfect strategy for us on the prop side to fund the big ones. The 50,000 is definitely, very, very solid, right? You're going to have lots of opportunity, very little risk, because you remember the worst kind of risk you take is, let's say you're going to go, you're going to go 8 large. So this is like level 4. That's 15 times $20 of risk is $300. Yeah, 20 times 15 is $300 worth of risk, and I have $2,500 worth of risk on the books, right? Now on a $250,000 account, 15 times $200 risk is $3,000 risk, and I still have $6,500 as my terminal stop. So I'm still nowhere near getting drawn down. You definitely get much closer to draw down on a $250,000 at a very large parabolic scaling. But regardless, the beauty of trying to make 2,000 a day and just funding the $250,000 account, is really, really nice. And then when you go to funded account, you can do smaller and just really, really stay in the game. So bottom line is this is very, very cool. It works sort of on the larger accounts, works on the smaller accounts. And obviously the ultimate goal for all of us, or for at least for me, is once we get about 3 or 4 of these funded in whatever sequence we want, we're going to trade replicate. And when we trade replicate, we're going to trade very, very small per account, but very large on trade replicators. So, making $20 a trade across 10 accounts is actually making $200 a trade. Do 10 of those, you've got $22,000 with, again, $300 worth of risk per account on the 50, or 20,000 on quarter. If I have 10 $250,000 accounts strung up, that's how big you could get as a payout. So it's very, very exciting, very interesting. The labels, I think, numerical labels versus just the pure labels really, really help. How do you get scalping indicator for gold? The scalping indicator actually is available just like Zip. It's available. Let me post it up for you here. It's available. over here, either as in my coaching program or in our direct program. I just posted both of those links, and you're able to get both of those scalping indicators, zip and scalping, over here. Give me a second, guys. I just want to change this. I think I think Apex is at 71% off. Let me give you the Apex discount link. Just 1 second before I forget everything, and then we can take a look and see what's going on. So it's 9:35 now. Let's do some. Let's focus on sort of my favorite. First of all, gold, massive sell-off again, right? Gold is just relentless sell-off. That's why you have to be very, very careful at how and when you're going to be a buyer of this thing, right? Right now, I'm kind of waiting for the next sell label before I want to be a buyer. On the S&P, we have some separation from the big trend, but we're nowhere near it kind of being oversold. So on the S&P, for example, by the way, when you have one or two labels, when the first two labels, I was actually trying to trade with trend. I want to show you what I did with the S&P. If you look at the S&P. So, first I tried to do the buy here because I thought maybe we had a little bit of bounce. I got stopped out at label 1. I said, oh, we're definitely going to be selling. So here's label 2. Now, there's 2 ways that you can trade my strategy. You can trade it momentum style. So if it's label 2, you just simply sell the red label and you try to see if it goes down on a momentum basis. Like, for example, you can sell this label 6 and see if it goes down on a momentum basis. That is not my preferred method of selling because I don't like to chase price. I like to trade at bargain. So, for example, right now, this is a pretty good bargain for us on the S&P. I'm going to try and sell the S&P here. Join Ask. Let's see if I can get in there. Okay. So I sold the S&P here at 42 because it's still, to me, a pretty significant sell trend. We're below the big trend. We have a massive sell-off. We raced back up. So now it's a retrace trade, right? It's a retrace trade. And probably, if I was really, really smart, I was just kind of rushing it. I would have waited till to sell the top of this thing. I may get stopped out of the retrace trade here. It's fine. And if I do, I'll go in. Fine, great. So we're going to go larger. I'm going to go for larger. Join Ask. Let's see if I can get in there. My nose is just dripping. Sorry. Okay. So I'm short now at 44, looking to resolve the whole thing at 42. But I'm actually, because this thing is moving so volatile up, I'm going to try to resolve it with about 6 ticks profit instead of 4 ticks profit. Because it's a pretty volatile trade here. It looks like we had a big sell-off, came back down. I want to take it back here on a retrace. And oh, come on, baby, come on, do me right. Just came in. Okay, and we're done. So it took me 2 trades to resolve this particular trade cycle, and that's fine. Mainly kind of because I sort of underestimated the power of the pushback. But the point being is that if I had sold over here, I was really out of my slope. But selling over here was at much better positions. So my whole argument is, I want to buy at bargain. I want to sell it. I want to sell it dear, even if I'm trading with trend. And if I'm trading counter trend, I absolutely want to sell the bottom here. So for example, right now, this is a 17th, sell label in gold. We're at 630. I'm definitely going to try and buy the first. I'm just going to get long here. I'm going to get long gold. If this thing pukes on me, great. If it doesn't, I pick the bottom. I'm going to pick up 20 ticks or $200 here at a relatively cheap price. So let's see if gold is going to work for me right now as a trade. I'm going to try to clean this up for you guys so you don't have to watch all the execution. I just want to show you the sequence of execution labels here. Again, gold is clearly over sold really hard, and I'm not looking to buy the breakout. I'm just trying to buy the absolute. And there we go. And there was a nice clean $200 that took me less than a minute. It was a 17th sell label, right? Now, if I wanted to get a little bit more comfortable, the 17th purple label, meaning the 17th reversal label, yes, I could go long here. But I'd much rather I like to go long at the bottom rather than to go long over here, even though I'm pretty comfortable this is going to turn my way on the upside, right? Now, in the meantime, as I'm looking at S&P, today, by the way, is clearly a non-trend day. Bond markets are not out. Stock markets are just kind of twiddling their thumbs. The only big trend is actually in gold for us today. So we could be in a very choppy environment. And when we're in choppy environment, we need to be very, very mindful to not just, follow our nose all the time. This is still pretty much a sell-off situation right now. We really haven't expanded so much on the moving average that, you want to be buying the bottom. It does look like it's kind of turning around here. You see it's big, all the purple candles are really not making fresh lows. We've had like 6 or 7 tests of the bottom here. Another great thing about labeling this stuff is you can see that it's not making any progress, right? It's made 6 or 7 runs to the bottom, hasn't really made progress. It's another great way for you to assess whether you want to take a punt on the fade side or stay with trend, right? It's clearly, it's starting turning around a little bit here. Let's take a look at NASDAQ, which I think looks much worse, right? So NASDAQ is a very, very clean, clear downtrend, right? So you have the first label. You could have sold this. The way I love to do it is, we have the red label. The counter trend label is over here. I want to sell the counter trend label because this is the first counter trend label in trend, meaning that this is a retrace trade. I love the idea of selling retrace trade. Now, can it become a V shape and just totally go the other way? Absolutely. But if it does, I'll reconfigure myself to the buy side. My point is, anytime I'm between 1 and 3 on the reds or 1 and 3 on the greens, I really want to be thinking in terms of trend, and I want to be thinking in terms of best possible, entrance on trend, which means I want to be selling the big buy candles, or if I'm in trend, I want to be buying the sell candles, right? That's really where I want to be in trend. Once I get into like the 5, 6 labels and I'm high up above the moving averages, at that point, I'm going to be looking to fade the highs, buy the lows. But here, this was a very, very clean trend trade. You saw, you have the one, you sold this over here at 90, right? You had a little bit of move up, but like you're trading with a 10-10, so 80 would be a target. You make the money here, and you have the second move over here. Look how beautiful it is. You sell this big green candle at 84, very little heat against you, and it drops like a stone. The beautiful part about trading retrace rather than chasing price, in my opinion, is that if you get it right, you have very, very little heat against you, meaning very little drawdown against you. If you get it wrong, you're just at first level. You can sell higher or buy lower. You're basically just beginning your trade cycle instead of having to worry about being completely over skis. So this approach, I think, is just dynamite as far as trading goes, because it allows us the best of both worlds: trading with trend, but selling the highs in the downtrend, or buying the lows in an uptrend, or trading against trend when we get completely stretched away. Like, we're not quite stretched away, obviously, in the S&P, in NASDAQ. I like to see it, 100 points from the moving average. That's really stretched away, really stretched away, and then maybe I will trade it. But and here we go on gold, showing us possibly. Should we go gold again? Let's see if we can buy the bid on gold. Let me give it just 1 second. Okay, let me see if I can buy a bid on gold here. All right, I'm long gold here. Again, this thing pukes down to 24, 25. I'm fine. I'll try to resolve it. If it kind of stops over here and gives me a chance to resolve myself, great. I'll take the quick profit. Right now, obviously gold is grossly oversold, so I'm trying to scalp it to the upside. NASDAQ is just starting to sort of really accelerate its sell trend. So now it goes through the 25s. So I'm going to go a little bit larger and just try to see if I can get it over here. Okay, so now I bought the 24 ones, and my target is 26 ones. and it goes down to 22. Now, gold is clearly being liquidated hard. But remember, in the hardest of liquidations, if you can buy the extreme sell, you have a pretty decent chance of resolving it, the other way. Just the short covering and the natural bargain hunting is going to start to come in. Again, it's the opposite of chasing price at the lows, trying to see if you could get bargains at the lows. But you have to be committed, and you gotta trade small size. I'm trading very, very small size relative to my size of my account. And now I'm done on the second one, and I'm almost up. I started the day at 250,500, and now I'm almost at 252. So I'm almost at $1,500, on just doing nothing but this bullshit, just endless thing. Now we're here at 200. Now this is a psychological level in NASDAQ, right? We're really starting to stretch away. If I wasn't around with you guys and I was doing it myself, I probably would be long over here. But I think I'm gonna stay patient because I don't want to get you into bad habits. I really don't have. This is basically a psychological level. It's going to puke a little bit more. I think it's probably going to go to the 180s before it's a legitimate bargain hunt on NASDAQ. It's really, really stretched away from the moving average. You can see all this stuff, right? And that's one way of trading. Another way of trading is if it comes back up above through the through the short-term line on a number 4 purple label. It's probably number 4 purple label is probably going to be a good sell if you want to stay on trend. The beautiful part about the scalping indicator is depending on your own proclivity, what you like to do. I like to buy things at lows, sell them at highs. It's just a much more natural state of being for me. Seeing the 200 kind of worked here. Some people like to just simply stay with trend. The key thing is this gives you the opportunity to do both, to do either, but to do it really, really properly. Like, for example, you see this gold over here at the 17. This is if this stays like this, the 17 reversal label, it's probably going to be a pretty decent, probably never a guarantee, but probably a halfway decent near-term bottom, right? Maybe good for 3 or 4 points, maybe good for 4 or 5 points if you're swing trading. And even if it isn't, I'm very confident that the 18th level or the 18th label or 19th label are going to be there because you're already in double-digit reversal labels. So the amount of selling to be done in gold is going to be less and less. There's too much selling has already been done, and so now we may be curving around for a possible turnaround. So you could read this from a swing trading basis or from a pure scalping basis, depending on what you like and what you want to do. Going to the S&P. S&P also kind of really, really stretching out here down to 35s. Everybody is puking a little bit too early for me on the S&P. Nothing here that I want to do. In the meantime, just keep an eye on gold if you're kind of a swing trader. So if I'm a swing trader, I'm kind of long here. Maybe I'm long at 29s, and the ultimate swing here is 23. So that's where I'm either going to I'm going to pick this as a bottom. It's either going to work or not work. If it doesn't work, there'll be a secondary bottom that I'm going to come back in on larger size if you want to trade it that way. But I'm pretty confident that this is going to be a relatively decent area for establishment of a bottom, because look how well look what it's telling you. It's the 16th, 17th sell-off, reversal sell-off. That's why labeling these things, I think, can be really, really helpful for you guys. And I hope you guys like the new look and feel of the thing. Let me know if you do in the comments. Would your scalping strategy in BK trading premium? Yes, I'm not quite sure what you mean. So if you want like the full details of how I scalp and like how we deconstruct stuff, you can join my coaching. Here's the link. I do the coaching every Tuesday night. So tomorrow we're going to do coaching, and there we do lots of different permutations of my scalping strategy, and you can see it. Here you get to just sort of see my indicator in action, how I interpret it, what I'm doing with it, where I'm trying to find the right areas of control. So as you can see so far, right? So far, my bottoming thesis in gold, if you're kind of a more of a swing trader, hanging in there, right? Not bad, right? And that's why I really love the indicator. The Nasdaq kind of holding on to 200, but here's the key thing: kind of holding underneath the 200, sold off what 15, 20 basis points. If it rallies back up, what's a better trade? A reversal trade or a sell trade into the belief that this is a still continuation of a trend? I kind of think it's going to be a trend down day. So besides showing the trend is exhausting or beginning, what do the higher numbers mean? Pretty much that. They're just labeling the numbers. There's nothing much more complicated behind it on that. That's really what it can do. So remember I said to you that I thought, NAS was going to kind of maybe hold 200 and then go down to the 80s. Like I said, now NAS is very likely to me, like if I'm just fooling around because I don't have any real signals here. I don't have any labels because it's just, totally underneath thing. NAS to me might be a little bit of a scalp in like the 70s, and if I'm wrong, in the 60s, because I definitely think it'll kind of find some sort of a bottom at day's lows here. But that's just me purely playing. See gold making a nice clean turnaround here. If you're trading scalp, maybe it'll get to 33, 34 off this turn. We'll see. But you can see how, clearly the whole idea is that, it is holding bid. Now, don't be too confident, because remember, gold has just had a turn here. So it's not like, it's absolutely guaranteed that it's going to be bottoming. But this is the second wave, the second sell-off wave. And generally, every wave gets weaker and weaker, right? Because the most vicious selling is at the highs, and the least amount of selling is at the lows. And it looks like this second wave is starting to turn itself up. It's very much like watching the ocean. It's really, really, if you watch the price action in wave-like form, to me, and using the labels really, really help you isolate when the waves are turning. It's really, really useful, in my opinion. So let's look at NASDAQ. Excuse me, S&P. I'm sorry. All right, S&P. So here's an interesting. So S&P showing us 7 purple label. I'm kind of like a little behind here. So 7 purple label, right? Market is pretty overextended here to the bottom, and now we're having like number 8 sell label, and my natural inclination here, would have been to sell this. I was late a little bit to sell this 36.25 to come back and try to take it back. But now I kind of think it's, it's really much more of a reversal trade here. So I will wait. My other instinct was, when it turned red over here, was to buy the red, because this would be the 8th sell label off a very, very sharp sell-off. So I'm happy to buy the bottom on the assumption that maybe this is a double bottom on the trade. But this is a much harder clean. It's much easier to sell, trend over here. It becomes, to me, much easier to kind of buy counter trend over here, if I could get it. Now let's watch this. This 8 label, if it really sells hard, I want to be a buyer here. Because I think I have a reasonable chance here. Again, on just a 2 lot on the S&P. So it's 34 seconds. I'm going to give it a full exhaustion time to see if it holds on a sell side. And again, this is my own interpretive idea that because we've had pretty strong extension, I'm not getting the trade. You can see the market is, market is a little bit ahead of me. I couldn't get the bargain. And if I can't, I'm going to let it go. This isn't the trade that I want to do. It really popped nicely. It would have been a good, could have been easy scalp to the buy side. All right, let's see what it wants to do now. Now, if you're a momentum trader, you can say, I'm going to sell this on the close because I think there's more continuity to the bounce. Continuity and momentum mean the same thing. That means that there's more continuation to the bounce side. If you're a fade trader like myself, you pause a little bit because you think maybe there's a little bit more continuity to the downside, so maybe you want to wait a little bit longer. But you're getting ready to actually to be a buyer, not a seller here. See, if you were a continuity trader, which I could have done this, I just don't like that. If you sold this 36, this was a pretty easy move to the downside, right? You could tell that that it was kind of an relatively easy trade to the downside. Now it gets interesting because this is this support here at 32. Do we bust down, make fresh lows, or have the lows been done for the day? That's the interesting part. Kathy's got her kids. I have my dogs. Why don't I trade the US 30? I just focus in time. I don't have the. It's just I can when you scalp, you really want to do one or two instruments at a time because it's just too too much of my attention being. Remember, these are quick trades, right? So my attention is kind of diffused here a little bit. All right, so this is a trade I really like. I get a reversal trade and then I get a sell-off trade. I think this is a puke down job, meaning this is kind of the final of the sell-off trade. Number 9 on the label. I may not even get this trade because this may not stay red, but yeah, it probably doesn't. But if this was if this was selling to the bottom, I would have loved to have bought this bottom over here, right? Because when you get a purple trade followed by a red trade, that usually means it's an exhaustion of the sell move here for the time being. So I'm sitting here parked out. Not sure what it's going to do here for me. If it's going to give me a red label. I take a dip here at 35.25. Maybe it's going to come back down to the double bottom, and then I'll just reconfigure myself. But I took a sort of a quasi attempt at picking a bottom here, off of all the labels and all the and all the positioning that we have here. But it may all right, it's fine. I'll get larger now. Okay, so now we're in at 33.25. I'm just going to try and see if I can modify this trade a little bit, get myself out at +6 ticks because I sort of mistimed the first entry. And let's see if I can get myself out here. Okay. And I got myself out. Not a beautiful trade, and I actually could have had the full 2 points, but I mistimed myself. And again, this wasn't a perfect trade. But you see how buying the low put me, maybe on the first one didn't put me in a good position, but certainly put me in a good position on the second one, and helped me resolve this trade, relatively well. So it just shows you that I think, especially when you're scalping, you kind of have to use the George Costanza method of thinking about stuff. When something looks super, super good to the sell side, or something looks super, super good to the buy side, generally, it's actually a much better trade the opposite side. Because what you're doing is you're buying peak selling, or you're selling peak buying just for that particular moment. You have to be careful. It's not, doesn't mean this is going to be true for the rest of the day, but just for that particular moment, you may be doing that, and that's gives you that that instant opportunity for trading. Now, again, the beautiful thing about the scalp position is you can do this 2-3 times in a row, and that's really when you start to compound your P&L. Because if you can do this 2 or 3 times in a row, like buy this, buy that. I'm watching this. If this stays red on the label, I'll be a buyer. But it looks like we're going to turn. I was going to say it looks like we're going to be turning here. My chance of buying it may not happen. We'll see. I told you that NASDAQ is probably going to, bottom around the 70s to 60s. That's pretty much where it's doing. But it hasn't really, we don't have a single purple label here yet. So that certainly hasn't, come up for us. I'm just watching out of the corner of my eye here. I want to give it maybe a little bit more. Maybe I'll miss this particular scalp, but I'll just give it a little bit more time. Because I like to see if I can buy it maybe somewhere underneath here on the lows. Although another thing you can do is with the S&P, it's such a I can go one contract, which is sort of a much more modest trade, and if it doesn't work, I'll give myself ample room. So okay, maybe this isn't going to be a super big P&L trade, but it'll still be like if I can get this working, like an 8-tick trade is still a $100 trade. It gets me up to 252. We'll see. Just fooling around. Okay, it wasn't. I picked up 50 off this thing, but you see, like since you and I have been talking, it's been what 10 minutes. I've been able to make 200, 250. So it's like $300-400 basically net commissions, all that stuff, in a very very clean manner. Let me just actually see what I've done so far. I'm actually curious. Yeah. Okay. So this is a good example. Look at this. Just me putzing around. I don't know if you guys can see this. $953 net. Yeah, no, I eat a lot of commissions, absolutely, but it's net. This is what I care about. If I do 1,000 a day, that's 15 days to target. If I do 2,000 a day, that's 7 days to target at $250,000 funding. With very very little heat. That's not bad, right? That's not bad at all, especially on a day like today where there's nothing to do. We're just dicking around. So I'm watching, what I'm interested in is kind of watching this NASDAQ trade. Because there is like a real temptation here to go, oh, if you're gonna get a purple label, I want to sell the purple label because it's in a deep, sell-off. I want to sell trend. But here's where you need to be super careful. And this is where watching the moving averages, watching the charts and being able to read the charts in a on a short-term basis is really, really important. This is really wide, right? We have a 100-point gap between the large and the small SMA, right? Generally, when you have that kind of a width of a gap, we're very vulnerable to a V-shaped move, which could take you 2, 3, 4 times before it finally starts falling apart and going the other way around. So I generally would not be looking to do a sell here. If I was over here when they're just starting to separate, that's a perfect trade. I love selling purple highs just when moving averages are close to each other, because then you have really high probability that it's going to reverse. And even if it goes to a V shape, you just simply reconfigure yourself to the long side because you're in the second cycle or third cycle. But when you're over here and you're looking to kind of fade the first purple move, you could be in danger of a much more massive V-shaped move. Something I learned kind of, from the School of Hard Knocks, which is something that we're going to talk about at Trader Fest with everybody on Saturday. So come join us then. Should be a lot of fun. Order filled. You guys like the What, Nancy? What's the stop? Sorry, what was the stop loss hit? Stop loss hit? I didn't. You hit a stop loss because were you trying to just kind of push it all the way up? You saw I got myself out at plus 4 ticks because I saw that there was going to be probably a little bit of a of a sell off. Now, by the way, look, here's a pretty good deal. This is a pretty good opportunity for us to get, and I'm going to get long small here. I'm just going to get very, very small. One contract. Again, yes, we could puke down another 3 or 4 points. So I want to give myself ample room to repair this trade. I don't want to be starting with 2 contracts on a move that could accelerate to the downside. I'm fully cognizant that even a 10 label could be just the beginning of a fresh trend, right? Because yes, we're wide to the moving average, but in a strong downtrend, that's just a pause that refreshes for another wave to the downside. So I'm looking not to capsize myself, which is why I took only 1 contract instead of 2 contracts on the S&P. It works. It doesn't work. I'll fully, I'll reconfigure myself at lower levels. I will even kind of, lower myself maybe instead of 8 ticks to just, 6 ticks at this point to see if we can resolve it. Because I'm probing for what potentially may be a bottom, but may not very well be. Fully cognizant of it. That's why you need to be super flexible in terms of size. As I said to you, the single most important thing when you trade, when you're scalping, is not you being right, but you being right on size. Oh, that's how you like them apples. I love that quote. Somebody write that down so I can use it in my guru quotes. And I think that, like my friend Anthony Cradell, who's going to be with me at Trader Fest, is a master of size control. And I'm going to talk to him. He uses completely different ideas of size control than I do. But it'll be fascinating to talk to him because I think you guys will find, his approach, which may dovetail very much with your personality, really, really interesting. So just, hopefully you guys will all come. It's a great show. I want everybody to come there. You guys have the links, right? Everybody else that got the links? Should I give you the link again? Let me put the link again. Hang on. I'm putting a link to Trader Fest again, so you guys can sign up. Look at NAS. So NAS is finally showing me a purple 3 on a reversal, which if I had my druthers, I'd rather be a buyer than a seller here. Meaning, I'd rather be a buyer around 169 here. But we'll see. Because I think it's a little bit more of a V-shaped move here than a full sell down. But maybe maybe I'm right. All right, so I'm short, tiny little break on this. Let's get larger on this. Where am I? It just ran down on me. All right, just a little bit longer. I wanted to buy myself at the 31s. Let's see if this kind of holds. The lows are 29.50. It may break the lows, which is fine. Remember what I said about, I want to do this right now. Let me see if I can do this. All right. Remember I said about, I love the purple to red, meaning, I like to buy the red after the purple because I'm hoping that that's the exhaustion move. And like that, look at this. Now it is an exhaustion move, and I'm going to take this closed position at 35. So the NASDAQ, you see that? I love the fade move because this is the reversal move. There's one final puke to the downside. I'm going to take this also at 6 ticks to get myself out of this. Just because, it was a small position. I don't need to worry about it. And I am at 252, right? I started the day at 250,000. Now I'm at 252, just basically managing this stuff. And I could have gone higher, but, I'm not a person that likes to juggle 2 balls at once. So I had to take the stuff. But I love the purple to red, meaning that, you have a massive sell-off. There's just a final gasp of the sellers. And I want to be buying those sellers because then I have a really strong chance of a reversal. Now, in this case, the purple to red didn't work. So purple to red, I would have bought this. I got stopped out. I had to go twice into the move before it reversed. So it's not like it always works, but when it does, it's a beautiful thing. And, you know, if you're trading with small size, you can resolve it most of the time. That's the key thing. So it gives you all these opportunities. Sorry, put in the phone number for those U.S. residents. What does that mean? You can put it. Anybody who, if you do the U.S. Oh shit! I gave you the wrong. I'm sorry, guys. Fuck. Hang on. I gave you the wrong link. Fuck me. Just a second. Let me give you the U.S. residents link. Just bear with me a second, guys. Hang on. Fuck. I need to bit.ly the new link. Okay, hang on. Okay, this is the US link for anybody who wants the US link, and you don't need the phone number. Just simply do clean, nice clean trade. And you see how now it's finally popping on the thing. And by the way, if you want to trade reverse, right? Here's a key thing that you want to look at. Higher lows on a, like this is 3, 4 is higher than 3 at this point. It would have been an interesting, if you like to wait for confirmation, good reversal trade, good, nice reversal trade here. This one, not so much yet. It hasn't, the 10 is still below the 9, right? So it's, maybe it's a V shape, but if you want to be more careful, you may want to wait for the 11, because if the 11 gets up a little bit higher than 10, that's going to be a much more comfortable reversal trade than you are at now. Right? Regardless of how you look at it, I hope you guys, well, look at that. Boom, nice V-shaped move. I hope you guys really like the new approach. It's just so much cleaner because it gives you statistically, sort of shows you, it's like the 7th or the 8th or the 10th sell down with a large moving average separation. I want to be on the opposite side, or I want to be looking for a reversal trade now in the best possible situation. Let's do a little poll test. Okay. Do you like the new BFF? Tell me if you guys like the new scalper strategy. I think it helps you to be a lot more focused, but I'd love to know your opinions. See how nicely the this reversed, right? In the meantime, by the way, gold, we did have a little bit of reversal, but it kind of hung up. Well, it did. What did we do? The 16, what were we at? 17 on the reversal side. And I said, we're looking at 30s. They went all the way to 32, came back down, came back up to 32. So it's still held up. Basically, we are below the lows of the day, and 18 is higher than 17. So if you took the 18 on a trade here, you would have done pretty well. You see how you can use that to make tactically interesting and tactically valuable entries? It's all there for you. It's just, it totally hangs in there for you. So hopefully you guys like it. All right, let's see what's going on over here. So day's low is 630. Day's low is 2160 on the NAS and S&P. Let's watch and see what they want to do here. Yeah, if you guys just joined, the best thing you can do is come watch me every day and bring all your friends. We're the only place on YouTube that trades like a motherfucker every day. I did, between now and the start of the day, how many trades did I do today with you guys? 10. There isn't a day where I do less than 5 or 10 trades, which means you get to see lots and lots of examples of my trades. In fact, I do so many trades that I don't even show them to you because it looks like the St. Valentine's Day massacre on the charts, right? So this is just NASDAQ, which has actually been calm. But look at the S&P. If I showed you all my trades in the S&P, look at this thing, right? Just so many trades that it almost pollutes the chart. So I don't really put them on the trades with you. But the point being is you get to see me execute this all over and over and over again. And that is literally the single best way for you to learn. By far, I've been reading this book on intelligence. And literally, we as human beings learn exactly like monkeys do. Monkey see, monkey do. trial and error off of somebody who shows you, off of, I hate, trust me, I'm not that word, but the word in neurology is mentor. But basically, an older monkey shows a newer monkey how to use a tool, and then the newer monkey does it, and then they acquire the skill, and then that skill gets refined to a really much greater degree. That's really my job. I'm just the older monkey here, kind of showing you the skill set, and you guys can totally modify it in 100 different ways. I would have. I was going to say I would have loved to have bought this 11 over here, but I was talking. So, anyways, kind of cool, right? Kind of really, really cool. In case you guys are wondering why, like, the 4s are repeat instead of a 5, the point is this thing is going to increment off of the red label. So if there's no new red label, it's just going to repeat the number. Don't, I'm not going to adjust the code because it's really it's immaterial. It's once you understand it, it just basically shows you that yes, it's making a new reversal code, but we haven't had a fresh sell-off code. That's it. But the gist of the matter you get, in the S&P here, you're in the double digits of the sell-off code. So buying the 11s, buying the 10s, it definitely puts you on the right side of the probability curve, because that's really what it's all about. It's me just putting you guys on the right side of the probability curve. I do not trade forex, my friend. We trade NASDAQ, S&P, and gold. That's all we do here, which is already too much. But no, Kathy trades forex. You can join her every day. She's super good at doing that. Here's the link to get both Kathy and me all for one low price, and come access. And then here's the link to Apex, guys. So yeah, today is the return of the $250,000 account. Making 2,000 in like the last hour and a half while Kay was talking and I'm talking is awesome. Hopefully we'll try to do the same thing tomorrow. I'm going to be super busy with Trader Fest, but this week is going to be I'm definitely going to put a lot of these ideas into practice because they're so much easier to work with, at least on my personality. All right, so there's 19% of you that don't like the new BFF. Tell me why, you bastards. Tell me. I want to know. No, I'm just kidding. Just actually tell me why, and I'm happy to to modify if you want. Look at this. I'm losing my win. I want Donald Trump numbers over here. Come on, guys. Let's run the table. Okay. I want it back up to 80. No, I'm just kidding. But tell me why you don't like it. Robot is doing well. We're just at the beginning stages of the robot trade, and I did a webinar last Thursday, which I think was really interesting in terms of where I think we should be doing it in terms of baby steps, and it definitely definitely it's playing itself out the way I want it to. But today the robot did well in DAX and German because there's no holidays. But honestly, you shouldn't even be trading today. The robot on holiday day. Because markets are going to be very, very flat. But yeah, it's doing okay. All right. Anything else? We're kind of like we're doing the typical 10:30 stall. We session lows at 29. Looks like we're kind of holding the session lows over here, right? So we'll see if there's a new puke wave. By the way. So when you're looking at this stuff, right, what's interesting you need to understand is it's not like we have a large moving average separation, but it doesn't mean that it's naturally going to go back up. What we have now is kind of a consolidation in the double. If you bought the bottoms, it kind of, popped up for a little bit, but not for quite a lot. It's totally possible on this pattern for it to sort of stay low and then have a second, another wave down. You need to be very much prepared for that and not be surprised by it, and actually position yourself to not try to get bowled over by that second wave if it happens. Because, you make your money by just scalping back up really, really quickly and then getting out of the way, and then just letting it see if it has one more wave to the downside. But definitely the second puke job over here is probably going to be a more meaningful bottom. So if we break the lows at 630 and it goes maybe to 620, there'll definitely be a more meaningful bottom here that you can trade better. Same with Nasdaq. We all know that around 10:30 during the day is when we start to really build the bottoms. Sometimes it's a really huge bottom that's the bottom for the day. Sometimes it's just a temporary one, but you need to be mindful of that move. What we're trying to do is just work around the edges, the absolute extremes. When everybody's puking to the downside, we want to be buying that because that has the highest probability of resolution. And that's what we're trying to do, just get the highest probability of resolution scalps, get them out of the way. Does that make sense to everybody? Oh, there's not enough votes. There's only 18 votes, you bastards. You did not vote a lot on this move here. Okay. Well, I guess everybody's getting tired, and I guess it's the holidays, so people are booking. Let's come back tomorrow. We're definitely going to try and trade the CPI data. This is Wednesday, right? I'm going to try to make myself available to trade the CPI. So I won't, I'll won't 100% guarantee it, but I'm almost pretty sure. And then I will definitely post a link, and Kay and I will trade the CPI. That'll be interesting too, because when you're trading news, that's a great example of trading edges. Where there's huge amount of volatility right into the news. And there's some really interesting possibilities to pick up either trend trades or counter trend trades, depending on how the play goes. But otherwise, thank you guys very much for hanging out. Any more questions you have for me? Anything else I can do for you? Yeah, 007, Monkey See, Monkey Do. Oh my God, I got to tell you, this book, I bet you many of you don't know, but there's literally no difference between our brains and ape brains, with just one exception. Our brains are bigger. Literally every function that we have, apes have, like biologically, the size, the prefrontal cortex, amygdala, all of those things they have. So I'm actually curious if you guys know, what is the one single thing that we have that makes us the winning animal in the animal kingdom? What is the one thing that apes cannot do that we do, that essentially gave us this massive edge over the rest of nature? Yeah, we definitely wait for the news to hit. We don't anticipate news. I definitely don't anticipate news. It's a lot more. It's a lot more. Apes have free choice. Apes actually have reasoning. Apes have ability to read intent. Apes have ability to lie. Apes have all those abilities. All those abilities. No, it's a much more basic thing. Thumb, yeah, tool set. That's one thing, but no, I'm talking about a mental thing that we have that the apes don't communicate. Correct. And Nell, you hit it. Language. Language allows you to create knowledge inside of symbolic representation. And then when you write it down, you can remember that knowledge. That knowledge then carries through generations, and you build upon that knowledge, and you create civilization and culture. And there, if you think about it, every single thing we know is a function of prior knowledge through civilization that we've been able to retain, not in our own brains, but really through written communication. Language is the only thing that separates us from the rest of the animal kingdom. Fresh lows on the S&P. So let's watch this. It's kind of interesting. Where's my mouse? Interesting. Okay, I'm kind of watching this. If I was really gambling, I'd be a buyer over here, but I'm not. I want to just kind of, see this. What I want to see is I want to see a purple red, like in other words, reversal trade and then a sell-off trade, and I'll buy the second sell-off trade as long as it sort of stays underneath the highs here. In the meantime, you see that the NAS kind of holding bid here. We have not made fresh lows, right? Have not made fresh lows. So that's sort of interesting as far as trade goes. And this would give me, if I was a reversal trader, this would give me pretty good confidence that I want to be a buyer here. Let's say now, if I was a buyer around 180, 188.90, Is there a chance we're going to make 200? I think so. It would have been a pretty decent chance for a reversal trade here. We'll see. But this is, if you're trading kind of like the breakout moves, you definitely want to be thinking about this on a more swing basis, where this is the low, and maybe you get 30, 40 points off a single contract using this, using the scalper. So you can use this 100 different ways. That's so useful and so valuable to you. I almost did 200 over here. All right, my friends, I got to run. Thank you so much. Another good day for us. As I said, I'm at 252 right now. I don't know if I'm gonna have a chance to trade for the rest of the day, because I really got to work on TraderFest. But otherwise, everybody have a wonderful, wonderful day. It's a quiet day. I don't think you're going to get too much movement. Maybe we come back to the moving averages here. Maybe it's going to make a rounded move here. Again, watch this. This should be interesting. Purple to red. We'll see if that gives us an opportunity for a one more opportunity, for a buy. But overall, I hope you guys enjoyed this. Thank you so much. Everybody enjoy. I will see everybody tomorrow, and then we're definitely going to try to schedule the CPI trade for Wednesday. I'll see you guys later. Take care.